Hello, chart watchers, and welcome to this Wednesday, August 29th Market Watchers Live show with your hosts, Tom Bowley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look at the market action. We continue to move higher in record territory across most of the major indices. Of course, the Dow Jones Industrial Average still a little bit below its January high, but it is up today, another 92 points, 26,156. The S&P 500 up 16 points and has cleared 2,900, trying to close above 2,900 for the first time in its history. The NASDAQ keeps rolling along, testing the 8,100 level just 2 days after closing above 8,000 for the first time. NASDAQ up 66 points today. The Russell 2000 up only 4 points today, so on a relative basis, lagging a bit, but still trying to set another record. 10-year Treasury yield up about 1 basis point, hit 290 earlier today. Currently at the 2.89% level. Volatility continues just to meander in a range over the last week or so between roughly 12 and 12.5, currently at 12.33. Number of groups really performing well today, but probably the four that are leading: materials up close to 1%, technology not far behind. You can see also consumer discretionary breaking to new highs, and energy continuing its recent uptrend and trading back up above the $75 level. The two leading stocks in the Dow Jones, we have Dow DuPont, which recently broke out above this triple top at 69, continuing to strengthen, and Microsoft, after sideways consolidating in a little bit of a symmetrical triangle, broke out a couple of days ago and now is clearing the late July high. So Microsoft leading software stocks higher today. And that is it for brief update. Erin, it is Wednesday. How are you doing today?
I'm doing quite well. How are you doing? I know it's your last day before the wedding.
It is. It's a big day and a big week for me, and it's also a big day for you because your dad, Carl Swenlin, is joining us. How are you doing today, Carl?
Doing great.
Always great to have you on here. And I know, anybody out there wanting to know anything about the decision point, you are covered today because we've got both Swenlins in the house today. So I'm sure we'll definitely go through a bunch of that. But if you can hang around with us for about 15 minutes or so, Carl will bring you back and you can share your presentation with the folks here.
Okay.
Sounds good. All right, Erin. Well, I know we got a lot to go over, so I'm going to let you go ahead and take it away.
Absolutely. So here's our upcoming schedule. As I mentioned, Tom will be out, but I do have Julius de Kempenaar joining me tomorrow and Friday. And then, of course, 3-day weekend, so there won't be any Market Watchers live on Labor Day. I will be doing the monthly decision point review when we return on Tuesday. I'll go over all those monthly charts that have just gone final. And then we have Tim Ord joining us on Wednesday as our special guest. So it should be a great week ahead. Today we have, as we were saying, my dad, Carl Swenlin, is here to do a presentation. Then we will be doing the 10 and 10, and the first symbol will be Texas Instruments. And finally, we will finish up with our segment, Are You Buying This? And we'll see if Tom and I can agree on whether we would buy the stocks or sell the stocks, or we have all different kinds of things to hand over to each other and see if we agree. I know yesterday we didn't agree on a couple of the 10 and 10, so this should be interesting. All right, Tom. Let's go ahead and start with those technical news headlines.
Sounds good. All right, let's take a look. First, take a look at the 10-year Treasury yield. We did have the GDP second estimate out this morning. Rose 4.2%. Market only expecting 4% even. So the second estimate did come in a little bit better than expected. At 10 a.m. this morning, July pending home sales came out. Not good at all. We had a pretty negative report, minus 0.7%. Which was quite a bit below the flat reading that was expected. And home building stocks just can't seem to get going. It's going to take some better reports, economic reports for sure. And the fact that we see the 10-year Treasury yield starting to rise again, that's probably going to put a little bit of, or at least give them some headwinds in that space. But the 10-year Treasury yield is rising. I think the bond market reacting a little bit to that better than expected GDP report. Of course, whenever you've got the Treasury yield rising, it means that Treasury prices are dropping. So money is rotating away from Treasuries and into equities, which is exactly what we'd expect with a better than expected GDP report. I would watch this 290 area. You can see with the gap down that we had earlier in August, we've really struggled to get back up through 290. We hit that level earlier, 2.899, and currently we are at 2.891. So we have backed off of it. I think a close back up above that 290 would initially allow us to go up and fill this gap closer to 2.93%. But ultimately, as I said yesterday on the show, I think over the last 2 to 3 months, we have a pretty clear line drawn in terms of resistance up at about 3%, 3.01%. And to the downside, these last two lows came right down to 2.81%. So that's an area that I would be watching. Let's see which level breaks first. Are we going to break out on the yield above that 301 level, or are we going to break down below 281? Hard to tell at this point. I'm not going to place a bet, although my educated guess would be that we are going to move to the upside. I think the long-term downtrend in Treasury yields ended with the huge move up that we've seen over the past couple of years. And so I think we could still see a 4.5% 10-year Treasury yield coming, but I'm not expecting that anytime soon, maybe within the next year or two. And that's exactly what the Fed has said. They've said that they are planning to raise rates, but it'll be gradual. And I think we'll see that reflected in the 10-year Treasury yield over time. All right, I'm going to go into the members dashboard here and just show you as we go through a few charts how you can get into the sector summary. This is where I start my day almost every day. When I went over the update at the beginning, you can see the four sectors that I spoke about that were performing the best. But if you look down the list, all 9 sectors are higher today. So this is a pretty wide participation advance to the upside after we saw a lot of, mixed action yesterday, mostly buying so far today. We'll see if this holds into the close. But the 4 areas that I think are worth noting, or at least keeping an eye on here, are the 4 aggressive groups: technology, consumer discretionary, and then financials and industrials. And I think maybe there's a little pause here with the financials and industrials because the 10-year Treasury yield is up at that 2.90 level. I suspect if we go through, we'll begin to see outperformance here, especially in the financials. But we'll wait and see. Within this group, I just wanted to mention a couple of areas that we've talked about recently. Banks. This, I think, is a very important area of the financials. You can see 495 remains a very key resistance level. We want to get a break above that 495 level on a closing basis. Another level that I'm watching, I talked about this when Erin and I did our watch list yesterday, life insurance. Life insurance has now bounced off of this 800 area. Since June, which is 3 months, we have seen roughly, I'm going to say, about 10 trips up to about 798 to maybe 802, 803. And we haven't been able to hold. And, well, we've been able to hold, but we haven't been able to get through. Notice today we had very, very weak opening in life insurance stocks, but we have rallied back. And you can see that more clearly on a very short-term 10-minute chart. You can see the huge drop earlier in the life insurance, and then the rally all the way back to fill that drop and trying now to move into positive territory. But the more important level is going to be this 800 level, and we're not far away. A breakout in life insurance stocks here, I think, would likely signal a resumption of an uptrend in the Treasury yield. I think that's one of the reasons, or I know that's one of the reasons why traders would be interested in this group, because higher Treasury yields do typically result in higher profits for life insurance companies. Okay, I also want to talk a little bit about technology, because this is a group that has been leading the rally for quite some time. So if we go back in here and we pull up technology, you'll see software leading. I mentioned Microsoft's breaking out today. It was just within the past few days we talked about the great earnings reports that came out of this space. I know Viva Systems, VEEV, was one that had come out with some really solid results. That was the candle that we were talking about. Look at the volume, and it has continued pushing to the upside. I find that to be incredibly bullish. And then we've got CRM, which is Salesforce.com. They report after the bell today, so they are already anticipating solid results. We're going to see whether or not they come through, similar to what we've seen with many of the other software stocks over the past month or so. But what I wanted to point out here is on the XLK, if we pull up a longer term relative chart, and I'm going to do a weekly, and let's go back since the start of this bull market. So I'm just going to go over the last 10 years, and don't need candlesticks. Let's use a solid line chart, and let's take a look at this. The Oh, I didn't really want CRM, but let's try this again. XLK versus SPX. All right. Here you can see we have gone through periods where we've seen money rotate away from technology, but for the most part, since the bull market began, this is a group that has been leading to the upside, and it continues to lead. And if we shorten this to a daily chart, which I'll do in just a second, you'll see that we are on the verge of potentially making another breakout after a double top. So we want to watch to see if we can make this breakout. So let me go ahead and bring up that daily chart and really shorten this down. We'll just do 1 year. But technology has been a leader. Here is that double top I was referring to. You can see software leading technology back to the upside again, and now technology relative to the S&P trying to make another breakout. Haven't seen it yet, but even the fact that we're just going sideways, that tells us that the XLK is at least performing along with the S&P 500. And in August, actually, we have been outperforming again. So let's see if we can get that relative breakout. But in the meantime, if we go back and take a look at the sector summary and then click on the technology, you will see here are the groups, and this is what's leading today. Notice down here, semiconductors. Semiconductors not up very much. We've been talking about overhead resistance on the semis, and check out where we sit right now. Somewhat similar to what we just talked about with the banks and life insurance companies, where we've got overhead resistance. In this case, semiconductors gapped down back on June 25th. Volume had picked up, and since then, these reaction highs that we've really struggled at about 35.60, 35.65, and today's high 35.62. We're currently 35.59. This is a group that if we can break above the recent highs, I think we could continue this uptrend and make another run for that June high around 37.50, and that might be enough to get that relative breakout on the technology group in general. So semiconductors are definitely a group worth watching. Let's pull up the software, because this is a group that was leading today and has been leading. Here was the breakout again on software stocks, and we could pull up a long-term chart, but software has been a great performer for quite some time. A huge move up. If I pull this up relative to the XLK, and then also let me pull it up relative to the S&P 500. We'll switch this to a line chart and make sure that this is going to show up as a line chart as well. And up the size of that, I think that'll do it. But here you can see that the software stocks in 2018 have been incredibly strong relative to technology. So if you're getting breakout in technology, you really want to continue to have exposure in the software stocks. And down here below, again, I stress this a lot, but as a short-term trader, I'm always trying to outperform the S&P 500. And it's a lot easier to do so when you've got a group that is outperforming the S&P 500. And clearly, that's what we have here with software. So just a couple of things to note there in the technology space. One final comment. I think I also mentioned this yesterday, but I'll mention it again. You've got the computer hardware stocks, which house Apple, and there's some others in there. Network appliance has been very strong, but you can check out and you can see that the PPO here is up near the 3 level. And if I drop this back, let's just go the last 3 years. You're going to see that when we get up into this area, this is where we tend to struggle a little bit. So yes, we've been straight up, but we were straight up in all these other times when the PPO gets up to this level. I'm not saying we can't go through. There's no guarantees, but this is a time or an area where I would expect maybe we'll see money rotate within technology, maybe a little bit away from computer hardware. Perhaps that money finds its way into semiconductors, and that's where we get that breakout. Anyway, just a few things to think about from a rotational perspective. All right, Erin, there were, I think, what, 3, 5, 4 upgrades, downgrades? I don't remember how many there were, but pull those charts up. That'd be great.
Sure. We have 3 upgrades and 2 downgrades. Let's go ahead and take a peek at those. All right. I will start with the downgrades. So we'll get that going right now. I went ahead and annotated these all. So the Bank of Nova Scotia, we've got an upgrade today from UBS. No, Canaccord, I'm sorry. We got it from Canaccord Genuity. We went from a buy to a hold on this particular downgrade. I certainly don't like the chart. I can see why analysts maybe were having a problem with it, but today's action really confirms the problems that are going on. The only good thing I could say is that we are still sitting on this rising bottoms trend line, and there is some support here around 58, where we saw, previous lows here back in February through April. But I look at this PMO that is now topping out in somewhat overbought territory. Scooter is starting to deteriorate. If it can hold that 58 level, there might be some hope here, but certainly one I wouldn't be looking to bottom fish with. Realty Income also, Realty Income Corp has also gotten a downgrade today, and they went from a buy to a neutral. Again, a lot of these downgrades, I can sort of see where they were coming from as far as the analysts, but I know they look at fundamentals more than the charts, of course. But I see this rising wedge that has really been in play, since about June, July timeframe. And of course, those are bearish patterns. So we would expect to see a drop below, a breakdown from that particular pattern. The PMO is pretty much confirming that there's some problems going on here. We did get it topping back here last week. It hasn't actually triggered a sell signal just yet, but notice the OBV, the volume has been kind of trailing off here. And then the scooter, although in that hot zone, it looks like it's trying to turn over as well. I think there are better candidates out there. So I wouldn't be looking at this again as a bottom fishing opportunity. Rand Gold Resources, UBS upgraded this from a neutral to a buy. And I found the upgrades very interesting today. There were certainly a lot of, the patterns are looking pretty good. I can see, how we might be looking at some breakout opportunities here. We're almost at a PMO buy signal. So this is something that I would normally look for when I go into an investment. Of course, it wouldn't show up on my scans because I have this pretty much negative across the board EMA configuration. So we are in a little bit of a rising trend here, and we have covered up that, yesterday we covered and close that gap, but we're now back below that area of gap resistance. So, it's setting up pretty nicely, but I would be a bit cautious if you want to get in here to bottom fish this one, just because the EMAs are set up in a very negative fashion, and that tells you that more than likely your bullish conclusions aren't going to pan out as well as bearish conclusions. Ferrari. This was also downgraded today from a hold to a buy, or upgraded today from a hold to a buy. I think this one's looking pretty great too. Look at this, you've got a nice OBV rising. The scooter is just moving up exponentially here. PMO buy signal already has occurred. We got a gap up today, and it is moving toward the resistance at the bottom of this gap that we had back in July. Next stop would be the closure of that gap. And so I would be looking for a gap closure at this point with the setup on the PMO. You've got the 20 just about ready to cross up here toward that 50-day EMA. I think this one looks pretty good. You can see we had a pretty much textbook head and shoulders here. And it did execute. We didn't quite get the minimum downside. Well, I guess you could say we did on this particular bar. We hit that minimum downside target, and now we're starting to come out of it with somewhat of a rounded bottom here. So I'm thinking race looks fairly good. And then finally, Royal Caribbean was upgraded today by Deutsche Bank from a hold to a buy. This one I'd be a little more careful with. While it looks like it's really had its run, we did get sort of a parabolic move going on up into this particular rally. We've got the very important resistance was broken earlier this week. We've got the big gap up. I think there's still room to rise, but this is an area that has posed problems as far as resistance, at least back at the end of last year. And, you can see that if we can get through that resistance level, I would say you have a pretty good chance at getting to the top we had back here in January. But, it's already been on quite a move. If we do see a collapse of this parabolic, I'll have to see what happens. But the 50 is about just moving right above that 200-day EMA. So it is putting it into a long-term bull market configuration. So I don't like the fact that my PMO is a bit on the overbought side. I just think it might need a pullback here, maybe even close that gap that just formed today. So,
hey, Erin.
Yes.
I will add there on the recreational services index, it wasn't anything I don't believe that I touched on in seasonality yesterday, but this is a group that actually does perform pretty well in the month of September, unlike most groups.
Ah, okay.
It's either its best month of the year or it's one of its best months of the year, which is kind of unusual given the overall market weakness. But seeing the breakout and some of these upgrades and then knowing the seasonal pattern, I agree it's a little overbought and could pull back. That might be an opportunity.
Yep. Well, it doesn't look great for Royal Caribbean, but in the seasonality, but it's
well, I think if you pull up the DJUSRQ,
mm-hmm.
$ DJUSRQ, and then go back to 20 years, I think you'll see. So maybe it's other stocks within that space.
Right. I bet if we did your relative chart, we probably see it's not holding up. Yeah, see much better for the industry group. So, yeah, I suspect if we did look at the, let's go ahead and look at the relative chart. Why not? Oops, that's your 1 hour chart. I want your relative chart. Don't I have that one on here? I guess I don't have that in here. Anyway, yeah, I think that's interesting, but it is overbought, so I'm not. I wouldn't be buying this. Give you a little bit of a like our final segments. I'm not buying this. So, all right. With the conclusion of our upgrades and downgrades, it's time to bring in my father again. And he is, as I said in my ChartCon presentation, prior to it, you have pretty much been the reason I am in the business I am in, and have taught me pretty much most of what I know about technical analysis. So I'm excited to have you on the show. I'm glad you decided to join us, and it was nice of you to say yes on your birthday when I asked you if you would come on the show.
Yeah, birthday present, huh?
Exactly. Hey, here's your birthday present. Come on my show.
Yeah, I've already penciled you in for May, Carl, when it's my birthday, because you seem to come in around everyone's birthday.
Okay, well, I could plan that.
Here you go.
Happy belated birthday.
Thank you.
Yes.
Okay, should I go ahead and share now?
Yeah, let's go ahead and see what you've got to share with everybody. And I will be taking your questions in the chat room. So be sure and just put all of them in there. And I'll try and get to those when Carl's done. So, all right.
All right. Let's see if I can find myself. All right. One of the things that I've been noticing recently is that we've got a parabolic developing in the S&P 500. First clue was, this is an old chart here, July 26th. The first clue was we had a rising wedge, which we expect that it should resolve downward, and instead it resolved upward and it hit overhead resistance at the all-time high. Okay, I'm trying to figure out how to get to my next chart.
Let's see. Oh, just scroll up more. There you go.
Oh, there we go. Okay. So we had one, there's the old rising wedge that resolved upward. And then we got another one that also resolved upward. And that just happened, of course, a few days ago. At that point, I saw this arc shape on the chart and thought, maybe we're getting into a parabolic here. So the next chart we have is the weekly chart, And here's the parabolic we got late last year and early this year. And now here's what we've got going here now. Note that it's kind of thick and heavy down in this area. It should start thinning out if that's what we're going to get as a parabolic. But right now it's on a pretty good path to go that way. Meaning that mostly we could expect upside, and every time we get to overbought condition, it's probably not important. But it's one of those things we'll watch as it develops, and we should see it get steeper and steeper if what we have here is a parabolic up move. Any questions?
So if I know that we talk about parabolics and the danger of them, can you kind of reiterate the danger of parabolics?
Well, once we get really started going really steep, it's really hard to pick a top. So you want to keep your stops closer and be ready to jump, because when they go, as you can see early this year, this is what happens. They go from straight up to straight down. And this one, if it keeps developing, it might be a month or two before we have to deal with the problem there.
All right. The other thing that I was writing down was that, you were looking at the bearish rising wedge, and instead of concluding, as it should have with a breakdown, it concluded with a breakout. Do you find that especially bullish, or?
Yeah, it is. It is a bullish result, because a rising wedge, basically the basic rule is the steepest line is the one that'll break first. So the bottom of a rising wedge is steeper than the top. So you expect, just as a matter of regular correction, it doesn't have to mean the world's coming to an end, but we expect when it gets into a rising wedge pattern, that as a corrective move is going to resolve downward. And once it's broken down, I don't really have a rule of thumb in terms of how far it's got to go, because once it's broken down, well, that's the it's met the expectation, and then from there on you have to play it by ear and see how it develops.
Hey, Carl, can I play devil's advocate for a minute?
Sure.
All right. Now, when I think parabolic, obviously I'm thinking that price action on a on a relative scale, looking back long term, we expect to see, for instance, PPOs or PMOs at highs like we haven't seen before. And when I look at a longer term chart on the SPY, like a weekly chart that goes back throughout the entire bull market, we've seen PMOs that have been up around 5. And yet currently right now, the PMO is only sitting about 2.6. So on the daily chart, I kind of see what you're showing in terms of a parabolic. But do you consider the fact that the weekly PMO is nowhere near some of the highs that it's had throughout this bull market? I mean, would you still believe this to be a parabolic, or is that only a short-term parabolic that you're talking about?
Well, I would say it's a nascent parabolic. It's just getting started. So it could go up quite a bit more and last, a month, months longer before, and assuming it does that, you're going to get a PMO reading up in the area of 4. But see, as I said, right now it's just starting to develop. The PMO is bottomed and it's just starting up again. Okay. And I'm basically saying, well, keep an eye on it, because we keep having these bearish formations resolving bullishly. So that's a good sign for the bulls. and be prepared to see more and more bullish outcomes.
Got it. Thank you.
Okay. And one of the things that I saw on a list somewhere is that somebody wanted you to do an OBV workshop. I am going to do a mini workshop here, but just to make a few points that people maybe don't know about OBV and see how useful it can be. OBV is very simple to calculate. If the price closes up, you add volume to the cumulative volume figure, and if the price closes down, you subtract the day's volume from the cumulative volume, and you end up with an OBV chart. One of the things I like about the OBV is that it's not finite. It doesn't have a finite range. The opposite of finite would be infinite, but of course, it's not really that crazy. But it can go. There's not any set range on OBV, like advanced decline line. But where you take a PMO or an RSI, PMO is kind of anchored to that zero line. The RSI has a range of 0 to 100, and there are a lot of the other indicators are like that. They have a finite range. So and you can get some rather interesting results because of that. Just a couple of examples here. Here we have a price going sideways, and we have a positive divergence on the PMO, and then we have a reverse divergence on the OBV, which is really excellent. Reverse divergence, in this case, you've got more down volume than up volume, even though the price is flat. Well, that's a good sign. It means the volume may be heavy, but it's not pulling price down. And eventually we get the expected result, which would be higher prices out of that. Here we have another reverse divergence. We've got price making a lower top and OBV making a higher top. This means that even though there's a lot of volume, up volume is king in this particular configuration here. So even though there's a lot of up volume, it's not pushing price higher. So in that case, the reverse divergence is bearish. And I have one more chart, which is much richer in content than that first one, but okay. Here we have a top beneath the top, whereas you've got that the PMO confirms that, and here we have a reverse divergence, which is bearish in this case because OBV is making a higher top than price is making a lower top. Coming next, you've got prices price a low here and a lower low. Positive divergence with the PMO because it's flat, and then we have the confirmation on OBV. Confirmations are like watching grass grow; they just confirm. Over here we have a lower low. We have this confirmation on OBV, and now on the on balanced volume, we have a positive divergence, a higher low. And that's very positive. Again, it's like even though price is going down, volume's drying up on that particular move. And finally, we have higher high and a negative divergence on the PMO, and then a confirmation on the OBV. Any questions on that?
No, I'm taking a look at what we have. I actually do have a question regarding the parabolics. But we can go back and do that, or we can do that at the end.
Sure, we can do it now.
Okay. So they said regarding a parabolic, what would you look at daily at confirmation, and what would the target be? How could you figure out what an upside target might be on a parabolic?
You can. Particularly in the case where you're making new all-time highs, there's not any way you can guess what the top's going to be. And when it's really moving fast and vertically, it's just a guess.
Right. You
can say, okay, I've made enough money, I'm getting out before this thing crashes, because it ultimately will. But like I say, right now we are in the beginnings of of a parabolic move. It's really, right here is the interesting part. We haven't got there yet. We're still down in this area, I think.
Mm-hmm.
So this could fizzle, and I'll say never mind. But right now it's looking, the way the market is acting. I think it's very possible we're going to see another one of these.
Mm-hmm.
That'll be fun.
Yeah. Well, not to put you on the spot against Tom McClellan, but somebody was saying that, the last time Tom McClellan was on the show, he was calling yesterday a bottom in the market, that we should look for even higher prices coming out of yesterday. And so what would be your opinion on that?
I'm sorry, I didn't understand. What is he calling for?
He called a bottom, a market bottom.
Oh, he did?
Yes.
Okay.
Not a top, but a bottom. So I guess coming off of the, breaking out of like the all-time highs.
Yeah, I think. Well, I'm trying to figure out.
Yeah, I'm trying to figure out where a bottom would be.
Yeah, where the bottom would be, because the last I know, he was still looking for a pullback.
I thought when he was back with us back in maybe the spring, he was just looking ahead, and he was saying we could have some summer weakness, and he thought maybe there would be an August bottom, and then we would take off from that point, go forward. But we never really put back like we normally do during the summer. I think that's what maybe the question's referring to, that we never really got that bottom that Tom was looking for, and now the market's breaking out and moving to the bottom.
Really, it doesn't show any inclination at this point to going down, like he has been looking for. So I think the bottom that he was looking for you'd have to say this is the default right there. Mm-hmm. Now, I don't know if you'd agree with me, but I'm just saying.
Yeah.
Yeah, I think we've done that, and I guess, and here we are moving higher. Look at this. It's just,
Yeah.
It's a mess.
It is moving parabolically for sure. And I know we've had one of the, maybe a concern or not. What would you say? I mean, you circled that PMO. It's been very, very flat, and prices just continue to rise. What do you make of that?
Well, the PMO is basically is based on a rate of change. So if you're going higher at a very, very even rate of change, the PMO is going to flatten. And so it's flat, and it's above the zero line substantially. And so it's just affirming that you've got good strength in there, and the flatness is not the problem. It is not a problem because it's above the zero line, well above the zero line.
Mm-hmm.
So, and it looks like it's turning up again, it's getting stronger. So we might see, get up there in the 2.0 area soon.
Right. Well, I know, and I haven't written about it, but I will be today, is we now have all of those decision point scoreboards are now completely green. For the NASDAQ, OEX, SPX, Dow, every single one of them in all three time frames for the PMO and the trend models are now all on buy signals, which is, I haven't seen, I mean, we've been doing the scoreboards for quite a while. I don't remember seeing all green holding up for very long. So it'll be very interesting to see if, the NASDAQ was actually the last one to fill in, and it got its PMO buy signal on the daily chart yesterday.
Yeah.
So I'm not sure, a lot of times I remember when we were doing that market summary, when we had everything on a buy, obviously we're in a great bull market situation.
You're fading out, Erin.
Oh, okay. Obviously, you're in this bull market situation, but now it's a question of, okay, well, how long can we withstand having all those buy signals all in all of the three time frames? So, I mean, I think it supports obviously that we're in a strong bull market, but then the question is going to become, where is the weakness going to show, or is it going to just be a painful drop in a couple days like we saw back in February?
No, I don't think we're going to reverse like that. I mean, that's just a guess, but it's just that last leg up. How many? That's weeks. Yeah, it's like 5 weeks from the bottom at the beginning of the year to the final top. That was relentless and steep. We haven't got there yet. They haven't got that kind of thing. Now, it doesn't mean it can't turn around in a normal course of events, but in terms of parabolic, we're not near there yet.
Yeah, not vertical enough.
Right. Okay. I wanted to revisit the advanced decline lines that I talked about last time. We had, up until the market went past the old high, we had reverse divergences going. And it turned out, I thought, well, I started breaking it down. I thought maybe it's not as clear cut as that. And I looked, and we had reverse divergences up to this point and this point, making higher highs against lower highs in the price. And then at that point, I think we had to disconnect from that structure and start working from the bottoms in here and start following the rising tops. So from here on, it was confirming price, even though the market had not hit a new high until it got up to here. The fact is, though, it was the indicators, advanced decline lines, were confirming the price rise. And that's it on that, unless there's a question. And finally, I'm going to take a quick look at the earnings charts. The hashtags on the hash marks, I should say, on the right-hand side of the chart here, red, blue, and green, show the range of where the market would be if it was at PE of 20 for the red line, and PE 15 for the blue, and PE of 10 for the green. PE of 10. Doesn't that sound wonderful? But right now, the market, this is where it's supposed to be, by the way, these hashtags, the marks, that's where the bands will be by the end of this year based on projected earnings. And we can see the price has already gotten to the top of the range that we expect for the end of the year. And as I said before, it's super overvalued because it's about a PE of 25 and well outside the normal range of the bands here. You can't buy and sell based on this, but you can be aware that there's a problem in valuations, that it is overvalued, and eventually, as you see in here, it's going to catch up. But who knows exactly when that's going to happen? It's just one of those things to keep in the background of your head that, well, not everything is as great as you hear them saying on the TV. And that concludes the presentation.
All right.
Hey, Carl, I got a question for you.
Sure.
I know that especially having Erin on the show as co-host, and talk a lot about the on-balance volume. Do you ever look to the accumulation distribution line for confirmation of the on-balance volume, or do you just find on-balance volume to be a better volume indicator?
I don't use accumulation distribution. I know what it is, but I'm not familiar with it because I don't use it. It's an interesting question, though. Could probably take a look at that.
Yeah, I know that, every once in a while, we will get a difference when you look at the two. And I know Erin and I have, talked about this sometimes and pulled up charts where occasionally you'll see the on-balance volume going up one day, and then you'll see the accumulation distribution line going down. And I know on-balance volume, if a stock is up, then the on-balance volume goes up by the amount of the volume. But I think the accumulation distribution looks at it as to where it closes relative to that day's price action. So what can happen, for instance, if a stock is trading at 20 and it gaps up to 21, but then it comes back down and closes at 20.50, on balance volume would look at that and say that that's a positive because it's up 50 cents for the day and the line goes up. But accumulation distribution would look at it and say, well, it closed near the low of the day. And so it ignores the fact that it's up from the prior day's close and only looks at that action that day. And sometimes it comes down. And so I was just curious whether or not, you had looked at that with some of these divergences that you were speaking of, and just whether or not you think that might add anything by using both of them to confirm, or whether, again, you just would rather stick with the on-balance value.
No, I haven't, but it's an interesting point. And I was thinking today, too, what would be nice is if we could get OBV calculated on tick volume throughout the day. Now, that would be fun.
Yeah. That would be interesting. That might appeal to me because I'm a minute by minute kind of guy. Yeah. I think it could be a lot different, but again, sometimes you think, this is going to be the perfect indicator, and it's not. I was trying to find a stock where I could kind of pull up and show the difference between. And actually, maybe this is not going to be a great example.
Well, while you're looking for that, Tom, I did have a question. They were asking, okay, you showed the OBV in a reverse divergence in one case where that was bearish. And so they didn't quite understand why a reverse divergence on the OBV is bearish. But sometimes it's bearish, sometimes it's bullish, depending on what's going on, correct?
A reverse divergence at the top is bearish. Okay. Like right here, we've got prices near the highs, and this is trying to go toward and make a new top. And the reverse divergence in this case is telling us there's a lot of volume going into this up move, but it's not enough to get price moving like it needs to be. Let's go back to the other one. I think there's example of the, excuse me, this one here. Okay, here's a reverse divergence. Okay, this is another reverse divergence at the top. Again, we got price going, making a lower top, and OBV making a higher top. I guess I don't have an example of a reverse divergence for a bottom. This would be the kind of thing you'd see right here, would be a lower OBV low, and let's just say the price stayed up here. That would be a case. But reverse divergences on down moves are bullish, and on up moves, towards the top of the move, they're bearish.
Okay.
I do have. Did you have any other questions, Erin?
No, I think that pretty much covers it.
I think the good point to make here is that the reverse divergences on OBV are really really great patterns to watch for. You don't get them. You don't get reverse divergences on like the PMO. Maybe you do, but I don't know where they would be. And the same with, you can get any kind of indicator that doesn't have a finite range. You look for them, and it's they say that that's one of the point I wanted to make, is that they say that volume leads price. Well, here's a case where it does. But if you have a reverse divergence at the top, that means you're going to have a higher OBV versus lower price. That is a case where volume is not leading. Okay.
Right. One last one. I know we're getting long here on this segment, but there seems to be several PE ratios to pick from. Which is the best and why?
I'm not sure. Okay, if we're just talking about my chart, that's, let me get to there.
And then, yeah, somebody made the comment that as far as that year-end ranges, it seemed like the perfect definition of priced for perfection.
Right. But mainly, there's, for a market index at least, the average, the acceptable range for PE is from 10 to 20. And the 15 is just there to know that, well, you're fair priced fairly. But when you get up to PE of 20, it's now become very overvalued. When you get down here in the PE of 10, then you're looking at, based on value, a good place to buy. But you don't really, you don't pick one of the three. It's just, it is what it is. And it has to do with your PE. It's basically, geez, I better not get into it, but it has to do with how much profit you're making. A company needs to make a certain amount of profit, and so once it gets out of this range, it's getting where it's just too expensive based on what money that the company brings in.
All right.
Okay, well, maybe one of our topics for a future discussion, Carl, might be that accumulation distribution versus the on balance. Maybe we can talk about that next time you're on. I think that would be an interesting topic, and I know our listeners would like to hear your thoughts on maybe the difference. That's just maybe something we could think about for the next show.
Yeah, I'll make a note of that. But keeping in mind that that I already know everything I want to know. I'm not interested in learning anything new.
That's funny. That's one of the funniest lines ever on Market Watch Live. I can appreciate that for sure. Anyway, it's always a pleasure having you on here, and we look forward to having you back sometime.
Okay, thank you, and it's been enjoyable.
All right, thanks, Carl. All right, Erin. Well, we got the 10 and 10. I know we're running a little behind, but I'm going to try to fly through these. So
that shouldn't be a problem for you. All right, I'm just going to take the screen briefly here so we can see what we do have on the request wagon right now. Obviously we still have some outliers running in here. I think we looked at Canopy Growth yesterday, so unless it's the most popular in the chat room, we won't be looking at that one today. Sorry, guys. I thought it was interesting. Lots of healthcare and technology, and really that pretty much dominates the requests today. So I think we should start making notes of this. It'd be very interesting to see sentiment. When people have a great interest in one area, whether that's a reversal point or a continuation. So anyway, let's go ahead and get started with our first one, Texas Instruments, TXN.
All right, TXN, I really like. I think on a relative basis, it's beginning to show some strength. You can see here relative to semis the last, I don't know, maybe what's that, 4 or 5 months. We've been uptrending, so I think that's a good thing. It's in a continuation pattern with a little bit of a cup here, followed by a handle, and it's nearing breakout, even though semis, and I talked about semis earlier, if we can get that short-term breakout on the semis, on that daily chart, then I think we've got a chance for a breakout here on Texas Instruments, and it is showing relative strength. So a breakout here, I think, would be bullish.
All right, and the most popular in the chat room by far is PayPal, PYPL. And weren't you a fan of this one? I feel like you were really pushing this one. I don't know when.
Yeah, I like the financial administration stocks, and you can see the top that formed back in the end of July. We pulled back, but we held support there. There were a couple of key levels kind of to watch, and it held. It actually turned before we got down there, and now it's trying to make a breakout. If we hold this breakout into the close with the PPO rising, I love it. If it fails and leaves a tail to the upside with this false breakout above these two tails, that would probably mean just a little bit more consolidation, maybe a 20-day test. But I think eventually PayPal breaks out and we go higher.
Okay. Let's go ahead and look at Cliff Natural Resources. That's materials, steel, CLF.
Yeah, I think this is in a great pattern. It almost got back to gap support. Actually, it may have tested it beautifully. When I see these earnings reports come out, and that's what happened here. Huge volume, gap up. This is the area or the zone of accumulation. And of course, this would be your target. So when we come back down and we start to test the top of this support zone, I think it's time to begin buying. We've been rallying off of it. I think eventually we're going to go back up to 11.25 to 11.50. Currently, I think we're in the middle. I wouldn't do anything with it if I wasn't in it at this point, but I do think we're going to make another run for the upper side of this trading range.
All right. Let's go ahead and look at FireEye, FEYE.
All right. This is part, I think we looked at Hack, which was the ETF recently in this cybersecurity area, and FEYE is one of those stocks. And you can see the volume starting to come in and the break above the 20-day. I think there's a couple of things you want to watch for here. Number one is we do have a stock that is downtrending. So when you get a stock that's downtrending like this, you want to be somewhat careful. But the volume is telling me that maybe we bottomed and we're starting to turn back up. I love going through the 20-day because at that level, we also had some resistance pretty close. There was the prior low and then the reaction high right up in here. I mean, this was kind of an area that we needed to get through, and that was also the 20-day moving average, and we went through all of that with very heavy volume. So I think what I would be looking for now on FireEye is if I'm playing it from a bullish perspective, then any pullback to test that rising 20-day moving average should hold.
Okay. Let's see, the next one I've got for you is going to be CRON, Kronos Group, Biotech.
All right. Well, biotechs are starting to catch fire again, and you can see this is certainly one of those. Massive volume, a lot of accumulation. The stock has gone up probably about 120% in what, 3 weeks, 2 weeks. This is crazy. This isn't my kind of a stock to trade, but let me go back a little further and let's just see if we look back maybe a year, if there's a key area that we can look for a pullback. Well, it looks like maybe we already did and tested it. This is clearly a very volatile stock, so keep this in mind. If you trade it, it's not for everyone. But here was the gap up on heavy volume where we cleared that 11.25 area. We went back, tested it, now starting to move higher again. It could continue moving higher, even though it's gone up so much in the past couple of weeks. PPO looks great. I think a couple of areas, maybe if it does weaken, you've got, I'd say, fairly important gap support at 10, and that 20-day moving average is rising rapidly. So I think the 10 area might start to present a little bit more or a little better reward to risk entry. So that maybe is what I'd try to wait for.
All right. Let's see. How about the next one, Ford? We haven't looked at autos in a while, and I guess they just had a really great dividend.
Yeah, I think right now, and autos were the worst performer yesterday. I don't know what's been going on today here so far in the entire group, but I do think there's a couple levels to watch. Here were your prior support level, which we lost on some pretty heavy volume in July and August. And now here we are coming back up. Maybe we're putting in a bottoming head and shoulder. You can kind of see the drop, move back up. Maybe that's going to be the neckline, pull back, and perhaps we just tested it and pulling back, putting in a right shoulder. I think it's too early to tell. Volume trends do not suggest that we've got a bottom in just yet. And I wouldn't be overly convinced until we get through about 10.15, 10.20, because this is where all the sellers really kicked in. And I think we're going to struggle to try to get back past that area.
Okay. For our Canadian friends, Waste Connections, WCN.TO.
All right. WCN.TO. Not a bad looking chart. I like the pullback. You can see the RSI has dipped back into the 40s, and this is maybe a good chart to kind of highlight that fact. When you get an uptrending stock like we've seen off of this bottom in February, if you put in a horizontal line right at RSI 40, anytime you get down to 40 in an uptrending stock, that normally is a pretty good time to think about getting in. Here, the stock pulls back, sets a very important support level, moves back up, and when it comes down the second time here, essentially, that would have been a great reward to risk entry. RSI at 40, you got an uptrend, sideways consolidation, you're holding support, and then it moved higher off of there. From the current price, I would be maybe looking at, trying to see, I mean, obviously, we got a big level down here at 97, but that's going to be tough to set up a good, solid reward to risk trade, especially with that being the initial target. I think if I was in it, I'd be using maybe yesterday's low. I would want to go back below. We were below the 50-day moving average. We reversed, held it, and now so far have a reversing candle in play. This is a bullish engulfing candle. So if it holds, I would expect to see another move fairly quickly up to about 105, 105 and a half.
All right. Let's do one. I don't know if you've heard of this one. Twitter, TWTR.
Rings a bell.
Mm-hmm.
Let's see, Twitter. I like it better than Facebook, but that's not saying a whole lot. Twitter definitely disappointed with its last earnings report. And I do think as we move up a little higher here, we're going to struggle when we get up to this key gap resistance zone. That's the bottom of this gap. But once we gapped, I talk about this a lot with hollow candles to the upside when we get good news. Same thing with filled candles when we get bad news. When you gap down, market makers are on the buy side because everybody's selling, and yet we didn't fill. We continued to sell. So that tells me there's a lot of overhead supply and selling pressure. And I think as Twitter gets closer to about 37.5, I actually think that it's going to struggle. Now, we are in a bull market, so maybe the bull market gets a breakout for Twitter, but it's not one of my favorite stocks in the internet space. I would avoid it.
Okay. Let's see. Let us go to Travelers, I believe it is. Yes, that's going to be our next one, TRV.
Okay, Travelers is starting to show some strength. And of course, many of the areas of life insurance or insurance in general, beginning to strengthen. And so a couple areas I'd be watching. You can see these reaction highs on Travelers right near 132, 132.5. We have climbed above that. and the PPO is beginning to look pretty strong. I think even, volume trends have begun to turn. We saw a lot of selling on the way down, but now, and maybe even call this a bottoming head and shoulder, or an inverse head and shoulder. Left shoulder, neckline, head, right side of the neckline. You can call one of these lows here the right shoulder. And so this breakout, I'd like to see more volume coming in. But I think this one, I think Travelers is starting to look a lot better. And I think once we get up to the 136.5 area to fill this gap, I think that's when we're going to find out what Travelers is made of.
All right. And our final one is the robotics ETF Robo, ROBO.
Love the trend line break. Now, again, this is an ETF, so I don't really worry about volume confirmation or anything like that with an ETF because it is designed to track whatever stocks are within the ETF. But I think if you look down here, you see clearly that we had probably what is more like a falling wedge, which is bullish off of an uptrend, and we clearly had an uptrend. I think we've broken that to the upside, and look at that PPO, looks great. I see this one going higher. It is overbought short term with an RSI over 70, but any kind of a test of the rising 20-day moving average going forward, I'd be a buyer.
All right. And look at you go. The 10 and 10 is complete. And here are the symbols that we went through. I will get these up in the Market Watchers live blog, live chart list. Just go to the Market Watchers live blog from the blogs tab, and you'll find the link right there at the top. I also want to mention that a lot of people were asking about how to make those PE charts that Carl put in. I will have all of the links to those live charts for you in today's Market Watchers live recap later this evening. So if you want to copy and take those charts with you into your own chart lists, you'll be able to see exactly how he constructed them, and you can save the annotations and everything on them. So just go to tonight's Market Watchers live recap from the blogs tab.
Erin?
Yes.
One point to make is the data on those monthly charts. Basically, it's not posted every day. I only post them a few times a month, so there's going to be gaps, but doesn't affect the monthly chart. But no, people should not try to make weekly or daily charts out of it because it'll be a mess.
Okay, good to note. But yes, so I will have those charts for you, the ones that Carl went through today, and with all of the links. All right, time for our final market update. So let's go ahead and get started on that. Markets are definitely having a good day, I would say, at this point. You can see, really, we were moving straight up from the open. It looks like we found a little bit of resistance right now, starting to digest the move to the upside for all of the major indexes. The mid caps are still sort of inching their way higher, pulling back right now just a little bit, but we've got Russell 2000, small caps, all of the major indexes are up. And you can see that Canadian markets also up, TSX, but pulling back at this point to digest the big move this morning. Treasury yields are mostly unchanged, reading at 2.882%. UUP is down on the day. Started up on the open, but pulled all the way back down. We're now flirting with intraday lows. And gold GLD is up, not a surprise with the dollar being lower, and it is trying to set some new intraday highs after a pullback later this morning, and currently reading at 114.18 for GLD. USO, big gap up this morning, and it did pull back, but is now making new intraday highs, currently reading at 1460. And finally, the VIX, as you can see, has moved lower. We're now getting readings at 12.31. And that concludes the final market update. I'm going to pass it back to you, Tom, briefly for, I know you usually have an interesting chart to share.
Yeah, I wanted to take a look just quickly at the IBB, which is the iShares for the NASDAQ Biotech ETF. And you can see that today we are making a breakout. Biotechs are having a really strong day. I know I saw Regeneron Pharma, which is REGN, also breaking out to the upside. That one's been a great long-term outperformer. But probably over the last year or so, it actually went into a tailspin for a bit, but it seems to be gathering its strength. But I just wanted to point out that biotech's here looking pretty good with the IBB breaking above that 120 level.
All right.
So let's go ahead and get started on, are you buying this? And if you're ready, why don't you go ahead and give me a stock? I've got the screen and I'll go ahead and pull it up and see if I'm agreeing, or actually, if you want to show it on your screen first, that's fine.
All right, let's see here. I am going to start with Alcoa. What I decided to do is look at some of the scan results that I got when I was doing a segment for yesterday, and pick the ones that I think look pretty good right now and see what you think. Right now, one of the ones that I think is very interesting, and I'm going to annotate it just really quickly here. I don't know why it gets blurry like that. I hate that. Okay. All right, let's go ahead and look. Here is what I would say a confirmation line to a possible double bottom here. Whoops, I don't want that one. There we go. And there. I like this particular setup. We haven't quite had the breakout, but if you took this down to these previous lows back in May, let's see if I can get in here. I don't know why my annotation tool is just not really happy with me right now. Okay. I don't want that one. Anyway, okay, there we go. But if you drag this down, you know, we've actually, we're not looking at the neckline now, we're just looking at some important, what was support back here and pose some resistance. And now we're sitting right on top of it and moving up. It is up 2.25% today. But would you buy this and look for a move? I'm looking at like a 5.5, maybe a $5 move to the upside. So about 49.50. Bringing us right to this area of resistance. So are you buying this? I've got a great PMO. Look at this. Look at the OBV doing all the right things.
Oh, you know, I'm not a value buyer. So I'm going to say no, that I would not be a buyer. I do like the fact that Alcoa held on to support that was established back at the end of 2017. You can see we came right down there. Very heavy volume. We are starting to turn up, and the volume, I will say, has definitely picked up. So I think that there are some possibilities here. We've also gotten back up above the 50-day for the first time in 3 weeks. But my big problem here is that I don't think it's made it to its biggest price resistance area on the chart. I think that's coming up. And so I don't know if we're going to go through there. So I'm going to say, and I'm just going to annotate it real quick as well, but I think that the gap resistance zone between 46 and 48, because of that huge, massive volume, I think we're going to see sellers in this area. So the stock's already gone up just in the past 2 weeks, about 10%, maybe 11%. And the PPO, you can see we failed at the center line last time. Here we are again. I just think it's a little premature to pick, to pull the trigger on this one, because again, it is entering into that zone. What I'd rather see is the company come out, report some pretty good results in the next quarter, and beat estimates, and then break above this level. And then I would begin to start looking for an entry point. But my style, I think it's just a little bit too early for me.
All right. Fair
enough. Okay, so I'm going to go and take a look first at Best Buy. This is not the one that I want you to look at to see if you would buy. I just want to go back. I mean, a lot of the retailers have been performing great. And Best Buy, as you can see, just recently broke out to a new high, clearing the tops that had been set earlier in 2018. And on a relative basis, you can see that the specialty retailers had not broken out, but Best Buy had. So you would think, okay, well, maybe this is a pretty good setup. But when I looked at the longer term relative strength of Best Buy, you can see that this has been in decline since all the way back at that January top, because this is where relative or where specialty retailers were. And we continued moving higher, and Best Buy was struggling. So I think that was a little bit of a false breakout. And Best Buy, by the way, when they reported their earnings, they did beat top and bottom line, but they warned about the next quarter. They lowered their earnings per share estimates. So I think a better stock in this space, and I think you like this one, but I'll wait to hear from you, is Williams-Sonoma, WSM. And here you can see a massive gap up, very, very heavy volume. And by the way, this is the second time in the last 2 quarters we've had positive surprises out of Williams-Sonoma. Not only that, but after gapping up and opening around 67.5, 68, we ran up to 73. We've come back these last few days on lesser volume to the area where we opened. And I find this to be a much better candidate And when you look at on a relative strength, since its relative downtrend ended just a few months ago, we're now starting to see this stair stepping of Williams-Sonoma relative to the specialty retailers. I think this is a much better play than Best Buy, and I think it's actually one of the best stocks in the specialty retail space. So, Erin, are you buying this?
All right. Well, let's see. I'm going to look at both charts, but I'll start with Williams-Sonoma. And I like the chart setup here. This looks like a pretty clear breakaway gap. It could end up being an island, but I think everything else is lined up pretty good, that I wouldn't be too worried about that. And, you know, we've had some down days here, and you can see the volume is petering out on those down days. So it seems to me it's sort of a blow off of that big move. And it is holding that 67.50 area. So I think this one is enticing. You know, I've got the PMO buy signal. I always worry when you get these big jumps like that. But as you were pointing out, we saw that back in May, and it didn't really hurt it at all. It just set up a new basing pattern really between $57.50 and $65. So I like that, but let me look at Best Buy and make a bit of a comparison here. There we go. All right. Yeah, isn't it interesting? It looks like the exact opposite chart. Like you flipped it over, right? If we had Tom McClellan here, how he always inverts his price charts and comes up with these crazy things, but it does look like the exact opposite. And so, yes, you know, when you're looking at the two, certainly Williams-Sonoma looks much better. You know, you can just see the opposite direction and movement of the PMO and the OBV and the scooter. Everything is pointing to trouble here. You know, and I think I would look at it and think, oh, well, maybe we're going to get close to some, you know, support here at 72.50. But, you know, I'm looking at this rising bottoms trend line. I haven't even drawn it in, but I don't need to. You can already see it's broken down below that. I would certainly not look at this as a possible island. Everything else is going too far south here on Best Buy. But yeah, Williams-Sonoma, I think, looks pretty tasty. And it is holding that spot above the resistance. So I'm buying your argument for sure that one is better than the other. And I would consider Williams-Sonoma. All right, I have the floor now, and we went over this. I think this was an upgrade yesterday, and I really like the chart. I meant to go in and buy it yesterday, and my daughter came to visit, and so I just everything went out the door because I was very interested in what she was doing. But I still think this is a buy. I'm still thinking I'm going to end up with an anatomy of a trade coming in here. I like this double bottom. You've got the confirmation line at it, and it has, you know, it gapped up over that confirmation line. I'm getting the 5 and the 20-day EMA. We're just about ready to get a buy signal in the short term. Of course, the PMO buy signal here. I'd say the only thing that maybe is a little bit of a I don't know, concern for me getting into this is just the fact the scooter has just been in the basement for so long. And you've got, obviously, it makes sense. You've got a 50 well below the 200-day EMA and the 20 as well. I don't want to get caught up in something like we saw back here in June where you got that 20-day EMA positive crossover. And then, you know, and the PMO was set up great. And then what happens? Meandered sideways and he eventually fell off the wagon. But I think getting that upgrade sort of confirms to me that this is a good one to get into. And I think I will be by the end of the day with a stop probably right around, looking over here in the thumbnail, probably a stop right around $12 for an intermediate term trade. And I would be looking for a move easily up to that $15 range. That would complete this pattern perfectly if we hit the 15. So I think a reward to risk is fairly good here. But what would you say?
Okay, well,
he's having to think about this one.
Yeah, well, the main positive I see on Cody is that when it gapped down here at the very end, first of all, the stock went from 14 down to 10 and change in 2 weeks and did so on some pretty good volume, but it also reversed back up on some big volume, and we've seen that continue. But we have failed where we had the prior support level. You can see that shooting star candle, which is a reversing candle off of an uptrend. That bothers me. I think the stock is probably getting close to bottoming. I'm just not sure it's not going to go down one more time and test that bottom, that low. And if you look at the personal products group right here, you can see that the high that was set in its peers back in January, we're nowhere near that high, even though the S&P in many areas of the market are breaking out. So it just kind of goes against my principles of trying to outperform the market by taking stocks within groups that are not performing particularly well. And you can see, even though the group has not performed well, Cody has been one of the worst performers. But I guess the question at this point is whether or not this has marked a bottom, and we're starting to see relative strength in both the group and in Cody individually. I'm going to go back kind of to what I said last time. I think it's just a little too early for me. I see some positives here, but I'd really like to see an earnings report or something fundamental come out where the company just blows away Wall Street and gaps up, and we get some kind of a breakaway gap from this downtrend that we've been seeing. So I've got some issues here. I would not be a buyer personally, but I do see some positives building here. And in fact, a lighter volume pullback, if we got back down near that low again with light volume, I think for me anyway, that's where I would have a better reward to risk from the way I trade.
There you are.
Okay. All right. Next one for you. So, and this will probably be our last one. This morning, the second estimate of GDP came in better than expected, 4.2%. And that exceeded the 4% estimate. And consumer spending was stronger than expected, and a big reason for this morning's surprise, positive surprise. So I made an argument in my blog article this morning. So I'm going to go ahead and pull that up. And I was talking about retail stocks and the fact that they have just been such great performers in 2018. And my, theme is that retail strength is probably just beginning. So I want to go down to a chart that I showed. I think it was in the Sector Industry Watch. Yeah, right here. And so let's pull this chart up. This is the XRT. So my question is going to be on the XRT. But you can see through the first 5 years of the bull market, XRT performed extremely well. Consumer discretionary was a big driver behind the bull market. But then we went into a period about 2 or 3 years where consumer discretionary was weak on a relative basis. And big reason was because retail just kind of meandered for a while. But we just recently broke out of this sideways consolidation pattern. And so my belief is that we are in a longer term raging bull market. And I love what I'm seeing with what's going on with the GDP and the fact that the GDP is really consumer driven. 2/3 of it, it's estimated 2/3 of it is consumer spending. And so with my belief that we're in a bull market and my belief that the XRT being part of that aggressive consumer discretionary area is beginning to lead again, I think the XRT goes a lot higher from here. So my question to you, Erin, is are you buying the XRT?
All right. Did you look at the PMO?
No, I did not.
Okay, I figured you picked this because my PMO does not look so great. All right.
I did not even look at it from your angle.
All right. Okay, well then here we go from my angle.
Okay.
All right. And I think my dad's still in the room. You're welcome to pitch in here if you would like. We can gang up on Tom. All right. So I am going to go right with that auto support resistance just straight off the bat. And then I'm going to go to, I want to draw some trend lines to make Greg Morris cringe because I know how much he loves trend lines. I'm just curious what we're seeing as far as, so a nice rising trend channel starting to shape up here. This is a bit concerning. I don't want to see the PMO on a downswing. It makes sense that it is because, of course, we've been, seeing a pullback here on XRT. But the scooter is still strong. I think the OBV looks pretty good here. And that support level is there, but I would want to see it hold. I I think that, if we got the drop, we'd end up with the sell signal. If you just want to look on a longer term basis, you've got, PMO tops declining here with price tops rising. That's a negative divergence. So I wouldn't be buying this. I think it might pose an opportunity here. But at least on the daily chart, I have to say I wouldn't be a buyer just yet.
Okay, that's fair enough.
What do you think, Dan?
No, I would have liked to have bought at the beginning of August when the PMO turned up. The first day it turned up, that would have been a good time to get in. That's what I normally look for.
Yeah. Now, and see, that's why I said Tom must have looked at the PMO, because he knows I'd never buy anything with a PMO looking like that.
Right. But at this point, no, I don't see an entry now.
No, not yet. Not yet.
Okay.
All right.
Fair enough.
Gosh, it's late. It's time to close out.
Yeah, we do have a poll, but we can quickly summarize that.
Yep, there you go. Those were the symbols we talked about, and we'll have to see what happens with these. But I know we need to close out, and we did have an interesting poll, and I think we have just a minute or two to go into it.
Yeah, if we can pull that poll up, we can at least talk about it for a second.
I know we've been kind of centering around the scooter lately because we've had some interesting, and if you watched the show yesterday, you probably got the answer right today. But let's see. So currently, if you're looking at our poll, I don't know, Tom, everybody, it looks like we're getting none of the above for the poll that you had. It was asking about the scooter. It's fallen 15 points to 25, and what actually caused that drop when you've got price up today, at least at the time we were doing it. So
well, once again, we're probably going to run out of time here, but I will say that it was the rate of change. It's actually the rate of change on the 125-day that is the problem. And the reason that it created, or the reason that the rate of change dropped, was actually because of the 20% price rise back on March 2nd. So the 8% of you that said that is why today's scooter is dropping, even though the price is up. But this will maybe be a subject. Maybe this is a good topic to go over for a Tuesday workshop sometime.
Absolutely.
Show a little bit of how this scooter works, because it doesn't always do exactly what you think it's going to do. And there are reasons for it.
Well, I think you're up for your first workshop since SharkCon when you get back.
Well, I think you've got next Tuesday.
Well, no, actually, you get the week off because I'll be doing that Decision Point monthly review right there, as you can see. But maybe we'll get you to do that the following Tuesday.
Absolutely. All right. Well, I do want to thank everybody for joining us today. It was a pleasure having Carl in. It's been a little while, so we look forward to having him back soon. Please remember to complete the survey as you exit. We'd love to get your feedback to hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Wednesday afternoon, everybody. I will be out the next 2 days, but Julius will be in here, so you'll be in great hands. I'll see you next week, but Julius and Erin will be back tomorrow. Happy trading.